Hey folks, welcome to the show. And hey Sharad, how's it going, man?
It's going well. Now we're in the middle of the summer and another day, another fintech company.
No, absolutely. I think another fintech company plus a lot of other things.
Yeah.
I'm really looking forward to today's chat. We have with us Mohan Krishnan. So Mohan is a serial entrepreneur. He's the founder of Emphasis, one of the largest IT and BPO providers in the country, a listed company.
Yeah.
Stock that me and you have also looked at closely
we
at
own
some
it.
point in time.
Yeah.
And Mohan obviously also is the founder of Global PayEx, which is an AI-powered cloud platform focused on working capital optimization. So so this should be a fun chat, considering every second SME that we meet, working cap is probably the biggest pain point for them.
Yeah.
So Mohan, welcome to the show.
Thanks, Nikhil. Thanks, Sharad.
Yeah.
So, I've been watching some of your efforts in the BNPL and other working capital podcasts that you have put together ahead of this. So happy to be here and we can kick off the conversation.
Great, no thanks, Mohan. Pleasure is all ours. So let's start briefly with Global PayEx. Obviously, we went through we went through the website, we went through the product proposition. Would love to kind of get a founder's broad overview on what's the proposition here.
Okay, let me start with how we arrived at that. Could probably lay the ground on about the landscape today and how we got on this solution. See, traditionally, and let me start with the AR side of things.
Mm-hmm.
Banks did what's called cash management for the companies. You both are bankers and performed in your past lives, but the cash management, as banks see it, was to just collect money on behalf of the clients and let them know how much they received.
Right.
That was and if you say, look at virtually every bank offered that as a product, and it didn't go much beyond, okay, we'll collect checks on your behalf, we will do CTS on your check, and we'll let you know what money you received at the end of the day. The trouble in that process is, they know how much was paid. Till about recently, they didn't even know, or the client customer didn't know, a clear way of knowing who paid that amount.
Mm-hmm.
The reason being, till all this data got entered at the bank self, which was sometimes outsourced, or the information came from the salespeople to the company, they didn't know who paid that amount. The other problem is the payments were not always exact amount in the invoices. In the B2C world, that's much simpler. If you look at it, you get a utility bill for a telephone bill, you pay exactly the same amount. You get a credit card bill, you may pay lesser. But what happens in the B2B world is that customer would bunch a number of invoices,
Right.
pay the amount, and there are also deductions because of goods returned, goods damaged, expiry dates, goods not delivered. The variety of, there are schemes and discounts which become applicable at a certain slab. All cash discounts they get because they're paying early. Mm-hmm. The payment almost never aligns to a single invoice or the total value of a bunch of it.
Mm-hmm.
Right. So just to get this picture together, you need what is now becoming an integrated receivables management story. So from a time when banks went and pitched, we will collect on your behalf. Now customers are saying, that's not good enough. Every integrated receivables RFP today has three components in it. Ability to pick up the outstanding ledger, which is from the companies itself. It could be an SAP or Oracle or any other ERPs, or at the lower end could be Tally or Sage or Quicken or Microsoft Dynamics. That has not just the invoice data, but that also has credit notes, debit notes, the discount schemes, all that data is from there. Deliver these invoices to the customer, so you know what happened, that's even before COVID. Even today in the US, for instance, I would comfortably say at least 40 to 60% of the invoices are delivered by mail.
Mm-hmm. Mm-hmm.
So a lot of companies offer these services, they print and post these invoices on behalf of customers.
Yeah.
There has been for the last 10 years or 15 years a movement towards electronic invoicing, but electronic invoicing in its form was not sending purely an invoice as a PDF on email, but you cannot action it. How are you going to pay that invoice? You still have to go back to the old methods of, like, say, let's sign a check for it, or should I use it an invoice due, or should I take one invoice, I pick up multiple invoices due, and at that point of payment, do I know how much money the company owes me? Right? Or if I pay this invoice today, am I getting an early payment discount or not? So this information is not together at all in any way.
Yeah.
So if you can present the full context of this information along with invoices, they can view the invoices, they can get the credit notes, they know for every invoice what the discounts are available. If I pay now, pay 15 days later, pay when it becomes due, or what penalty I pay as overdue interest to the company if I pay after the 45 days credit period. If the information is available, it gets customers, one, to understand the full context of the payment, make a payment where you can also capture what the context is. This is not disjointed pieces of information. When I say that, I picked up, the customer picked up 5 invoices, availed these cash discounts, applied these credit notes, and made one consolidated payment. What does the bank see? Bank has no context of any of this. Bank sees, even with a recent effort to get virtual account is in a way, instead of getting one account to pay into, they'll create accounts for each individual customer and ask them to do an NEFT or RTGS into that. So they know who paid, but they have zero context of why did the customer pay X amount against this invoice.
Yeah.
Now, in many cases, I'll switch to give you, step back and give you a slightly broader context of receivables. Take any one of those large customers, for example, Bridgestone. Bridgestone has 2 broad segments, or rather 3. First is the tire replacement market, which you find in the tire dealers. This is the replacement tire market. Right? There's a dealers or distributors who buy tires from them. The second are OEM. They're also selling to the Hondas and the Marutis or whatever the world. And the third is, of late, you might be getting to some e-commerce offering from tires and dealers.
Right.
I'll keep the last one aside for a moment. We'll come to that later. In the first piece, which is where they're selling to the dealers or the dealers distributors, is this issue of invoice delivery, what discounts to be applied, what credit notes are due to them, what are the for instance, there never is a consolidated information on what were the tires that were returned because they were damaged or short delivery or whatever. If you give all of this to them in one simple portal.
Right.
The portal is, right now we do both on web, mobile, completely, you can transparently move from one to another, and also enable payment right from that context. So he goes and selects 10 invoices, as said, applies credit note, applies his discounts because he's hit a slab or whatever, and makes that one payment, and make that payment possible right from there. He doesn't have to log out, go into his bank, log in, and set up an NEFT RTGS or whatever.
Right.
So he selects this and say, I pay by any of the mechanisms that is supported, and here comes your financing option. Embed in that itself as a mode of payment any credit line he might have, either from NBFCs or banks. So if he has a credit line perhaps with like HDFC, that also becomes available right there. So he can say, I owe them 300,000 rupees or dollars, of which I have 200,000. I can borrow the balance from the lender itself. And this is all electronically linked. So when he chooses an option to avail that credit line, our systems go and check back because we're integrated with the lender. What is credit limit? Is this limit available to you? Automatically make that entry on the lender system. They process the payment and give that money to the company. We do multiple reconciliation. First of all, we know because the payment that happens is right from our context, payment is successful or not right there. We also get from the bank, the receiving bank, MT940s or whatever, which says the payment has been received, and we have the outstanding ledger information, which was the first one, which says what are the invoices, credit notes, schemes, debit notes.
Yeah.
So that the EIPP, electronic invoice presentment and payment ecosystem we create, a product like Prepay, which caters to the dealer, distributor, MSME segment, and that's where the credit integrated into the payment workflow.
Yeah.
It's also becomes important. So there are multiple NBFCs and banks who, so we are around 20,000 plus distributor dealers on the network, even just in India. These are not retailers.
Yeah.
Retailer MSME credit is a much smaller ticket item.
Yeah.
So these are the distributors where a single payment could be anywhere from, let's say, 2 lakhs to a crore.
Yeah.
This is so in that segment, their credit is also integrated right through us. So we work with NBFCs and banks to first onboard, approve a credit line, but the request for the credit, the automatic approval, check of the credit limits, disbursement to the customer is all through the same system.
Interesting.
This is the EIPP enrollment.
Yeah.
And we also do one more thing. One of the challenges is it's easy to lend, very difficult to collect.
Yeah.
That's where if you look at the default rate of most of the, I say, as a friend of mine who's an algorithm lender, his family is 24%, right? So we can treat it as an acquisition cost, but that is a real challenge in collection.
Yeah.
With the banks, if you look at it, many of them are wise enough to lend within a certain kilometer radius of their branch. At the end of it, they'll send somebody from the bank to go and sit at to collect the money. So, but how do we change it is, the same invoice which was paid by the dealer borrowing from the lender, now it is turned into money payable to the lender. The same system. So an invoice payable to Bridgestone now becomes an invoice payable to Amidify or an HDFC or a Yes Bank, aligned to the credit periods, aligned to the credit policy. So it's one absolutely transparent, fluid ecosystem that we create in the EIP.
Right.
It's
What it also,
sorry, go ahead.
so what it also does, earlier, if you remember, traditionally in the business, salespeople were tasked with collections. Right? And they say, the guy will say, I posted a check, the old check is in the mail, nobody knows where the check is till it gets the account. We don't know what he paid for. Therefore, that account to be credited and the credit limit for the dealer to be released is to take anywhere from 3 days to a week or whatever. The inefficiency of that system is the dealer believes he has paid because he has paid. His account has not been credited again because people are struggling to figure out what that payment is about, all that earlier stuff which I was talking to you about. And he cannot place the order because the system has not released his credit limit.
Yeah.
So this gets them to the order to cash cycle. He is able to order much faster. Second part of it is this information is it's a single picture, real time, visible to the accounts department, to the CFO, to the dealer distributor, the sales reps who are covering the beat of those guys. Also, finally, shipping points. After the money has been received, the shipping point takes 2 or 3 days for the accounts department to inform the guys the shipping point. You can now ship the pending order. So this is not what we're really looking at. An improvement in the working capital system is multi-fold. I'm just taking this. For the company, earlier you collect, or the faster you collect, is better for your working capital. That's the most obvious. For the dealers, can they get an early payment discount, which is 3%, whereas borrowing costs are 1.5%? Can we integrate that MSME lending system onto the same platform? 3, take out the inefficiencies in the business which I'm talking about, with more real-time, consistent visibility. It stops disputes. The moment you have disputes, I have paid, you're not received, there is unhappiness in the ecosystem.
Yeah.
Right. So this is customer satisfaction measurably improves because everyone has the same picture. So that overall improves that one. This is one part of the one segment of the EIPP segment of the working capital on the AR side. I'm laying out the context for what, very simple to say EIPP, but when you talk about working capital optimization, what are the levers you have for working capital optimization? It's different from AR automation. A lot of companies do okay, we can scrape the screens and give you some stuff. This is not. This is really an ecosystem play.
Yeah.
Now let's step back for a moment to the other one, to the Hondas and Marutis and the bigger OEM deals. There's no way they are going to come to your app or a portal and pay.
Yeah.
There, orders keep flowing. You have to deliver those invoices, those companies. Those companies will now hand over those invoices to their account payable teams.
Yeah.
Right? Those could be outsourced to perhaps the Deloitte or Accenture. They might have in-house team. They will look at exactly similar criteria. What are the credit periods? What are the goods returned? What discounts are applicable? And they will instruct their bank to make one payment. They're the problem.
Yeah.
That's the problem. Now, the payment happens to the bank, and the companies or banks on their behalf will send you sometimes hundreds of pages of what's called a remittance advice. And the remittance advice from each of these customers is way different. It talks about which is the total number we paid, what invoices, what deductions, what goods returned, and what are the return codes. Then it becomes applicable very, very, now we have got a lot of clients coming in there. Let's take any consumer products company. And I don't know, we have Amul, Marico, we're talking to other bigger names, talking about whatever. They are all selling to an Amazon, they're selling to a DMart, they're selling to a Reliance Retail. Look at, that is the second similar segment. There the challenge is, order will be consolidated by the central agency, deliveries to the different reports. And these reports individually submit this, this is what the deductions are. So, are these deductions, for instance, which they are making, verifying whether deductions are legal, are they within limits? If within 90 days that period goes off, they will write off 0.5% of revenue in these deductions itself.
Yeah.
So there the challenge is, again, we are not in the middle of the payment, because we are never going to be in the middle of the payment. That's like a Honda would instruct their AP process to pay, but to reconcile the invoices and debit notes, credit notes, the payment that the bank received, again, banks have no context. Say what the invoice is, and it's completely asynchronous remittance advice or payment advice. They send what this pertains to, including the collection. Like they do the deduction, is what you need to reconcile and now go post it straight to the yard.
Yeah.
That's what the algorithmic product does.
Okay. And
So what it does, the AI part, and the first one is not an AI system, straightforward, because there's complete context of the payment right being in it. What algorithm does is the ability to understand and say contextualized extraction of data from those remittance advices. And you start building lexicon about what does RTV mean? Return to vendor. That's what Reliance uses for return to somebody. Somebody is to be goods returned in plain English. So it is each format. If we have time, we'll perhaps show you the demo. The sheer complexity of reading remittance advice from them. Okay, so our ability to extract the data, contextualize the data, build industry-specific lexicon so that becomes very easy, and finally do intelligent matching of the invoices with the payments with the stuff, and also in real time monitor the deductions. So Walmart has 47 deduction codes. So each company they report corresponding deductions in their own codes. Nobody's going to change.
yeah.
So we'll be able to map all of this and put a picture and monitor directions, and so this is all what the AI comes in, ability to do intelligent math. So we're able to get in about in about 3 months we would be into that system. We are getting 95-98% match rate and straight through processing of this into the year. Meantime, we also, what happens there is the same issue we talked about. There is no perfect match. So there's a partial. So there are multiple tolerance limits. Especially if you're getting PayEx and FX, there'll be foreign exchange related tolerance limit. So if you say what they paid, the tolerance band is 75.60 to 75.80, accept it as paid. The balance gets settled in a different way. Or you say, I have a corresponding credit note in the system automatically. So what the system learns, the way these companies treat these stuff, and after it gets to a certain threshold, it takes that out of, no longer has, the system is trained. It's not doing it itself. That's where the AI steps in. So that is the algorithmic part of it. In both cases, absolute transparency, ability to resolve disputes, because if there is a part payment, when you automatically send that information saying, look, we don't understand why it's a part payment because we can't find any reason for deduction or any credit note, the full context is given to them saying, look at this, this is the payment, this is your claim for whatever, please update if you have a goods return note update, right? So dispute resolution from 90 days is dropped down to 2 days or 3 days. So this is the overall efficiency in the AR side we bring in. We don't play a big part in the borrowing part of these companies because the companies have their own lender system. But what we are sitting on, there's a data play. If you look at how today credit, say CBILS or whatever do credit scoring, even MSME, the algorithm-based lending, digital lending guys do credit scoring. They start off by saying, okay, basic collection of information, then look at your CIBIL score, look at your bank account information, look at your tax return. In MSME, these are, you all know what your chartered accountant files is your tax return. But compared to, they do not have information on, we just in the middle of every invoice that goes to that particular client. We know what his credit limits are. We're sitting in information of his payment behavior. Does he react to daily payment discount of 1.5% or 2%? How regularly he pays. If a 45-day credit guy pays on an 83rd guy, he has a 23-day credit requirement, and that in turn translates into pricing for the lenders.
Yeah.
Okay, so we have not started lending ourselves, but this is the kind of information what partner lenders get for them to quickly decide, is it credit worthy, or can we differentially price credit limits for people who need more, etc.
Yeah.
So that is the data value, and we're building a whole data ecosystem with that.
Yeah.
So this is the AR part.
Okay.
So,
No.
any questions?
Sir, yeah, sure. A couple actually. Just to get a sense of the, selling this service. I mean, for the larger companies, we can understand, but for some of the smaller companies, I think, like you rightly said, right, they understand that, having a small AR is good. The quicker I get money, but is it hard to sort of educate them and sell on the cash flow value of actually optimizing working capital? Because it's for a lot of smaller businesses, it's not very intuitive. They know directionally that it's good to sort of get cash flow quick and fast and sort of have those conversion, but do they understand the cash flow implications? And when you sort of go and sell this, is it sort of intuitive for them to bring it on and actually imagine how much cash flow can be unlocked, how much value can be unlocked?
And like a related point to that, what kind of a role does integration play here? Because essentially, like from the standpoint of the payee, it completely makes sense, right? Whosoever is raising the invoice. But like from the standpoint of the payer, integration into their systems, like in a lot of SMEs, a lot of MSMEs, they kind of still manage their books in a fairly, I would say, manual manner. So, what kind of a role does integration play here?
Right now, that's a very good question. Both are excellent questions. Let's look at classification of companies. Let me start with the first question you asked. We're dealing with, look at our customer list, you'll see, you find a very highly optimized corporate. Money crossing, extremely, superbly optimized. That it is, banks always try, there's no float money with money. For those companies, they understand the value.
Yeah.
So like just to say, a 3,500 crore company, if you shave off 1 day or in a DSO, in days outstanding, that's the working capital they have to fund some from there.
Yeah.
Not from equity they have to borrow. That's very easily transferred. So Treasury understands the value of collecting early. The CFO understands the overall finance picture. The commercial ops was tasked operationally to run after collection. They understand the value of like the automation that brings in. And finally, the sales guys are now to sell more because the time they spend chasing for collections becomes there is mitigation there. You'd also be surprised how smart They may not be using business school terminology as cash flow, DS or whatever.
Yeah.
Talk to the retailer who has a kata book. I'm saying the book when he writes down.
Yeah.
He knows his cash flow like back of that.
Yeah. Yeah.
Okay. But in fact, we started this business targeting the distributors selling to the retailers.
Right.
See, companies sell to distributors, distributors sell to retailers, retailers sell to consumers. This is the primary, secondary, and this is what you call the tertiary kind of. The problem there is, our own statistics say, how this all evolving ecosystem, this will in a way dovetail as an answer to the question you asked, Nikhil. Our whole hypothesis was you get a retailer. He's selling to 30 different companies, or buying from 30 different companies. So if we get him, he has one place where he can pay all these guys from, right? That, which is partly, in India for instance, Tally would be the system where they enter and keep the accounts, and they can integrate banking in it to pay. But two other stuff has to come. How do they accept and ingest invoice?
Yep.
One. Two, how is the middle, what I use a term called retail operating system. That is very, 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 very fragmented in the country. Every neobank, the Kata books and the likes of them, they are all trying to give him some system which is equivalent, which is not a tally accounting, which is more like an ERP for him to maintain inventories, his customer side or the CRM side of it, his banking side of it, and the payment side of it is acceptance of invoice. There is no clear winner set. So we were right there saying we give you one portal. So in fact, just to illustrate that, we have the entire segment. We have now Goodyear, we have Continental, sorry, not Goodyear, Bridgestone, Continental, two more. We're talking to similar size. The distributors sell our distributors for more than one company. So all their invoices are just in our portal. He doesn't have to go to another place to pay.
Right.
We thought that would be the ecosystem pay in retailers. The 10 to 14 million retailers whom we talk to, which all the other players we talked about, from the neo-banking side, the opener neo, from Kata book side. Now the big 800-pound gorilla is Reliance is out there. Maybe to say no clear winners. Tally has no aptitude to get into that market because they are making enough money and they're just saying we'll do accounting, taxes, filing.
Yeah.
They would have been a natural progression to provide that software. So that is a big question mark. Very fragmented. There's no revenue model here because what would he pay you for? How are you going to charge this? Can the retailer charge him a subscription model for this software? He's not going to pay because he's getting it free from 5 different guys.
Yeah.
Till that gets resolved. And that's not an easy piece. You look at the pieces that have come together.
Yeah.
First, there should be a central mini ERP for the retailer. That can accept invoices from his supplier.
Yeah.
Yeah. Yeah.
That is able to invoice his customers from there. And they are able to pay electronically or cash because a lot of cash out there.
Yeah.
And he is able to also borrow from wherever. So right now these pieces all disjointed. Banking guys, neobanks going to say, okay, we'll give you banking from your application, we'll plug into Tally, whatever. But he's not doing business in Tally.
Yeah.
Tally is a system of record which he enters accounting before that, because of GST, etc. They're doing it, but it's a post facto record keeping system. So that's evolving. Even in the US, but there are Sage QuickBooks connected with some of these products which do for MSMEs. It has a long way for it to go before this ecosystem to evolve. So we started down the way, quickly realized absolute heavy lifting, enrolling the retailers. And who's the other biggest hurdle? The FMCG. A Procter & Gamble or Unilever would never want to do anything if the other is there.
Sure.
Really. We had conversations with virtually all of them. So Unilever will say Procter & Gamble is there. No. There's no reason, whatever. And now here comes an interesting part. FMCGs have tried to put this ecosystem into the retailers too.
Right.
Now, if they give, and Unilever gives the system to a retailer, apart from trying to control the money flow, that's a system where Procter & Gamble's sales is going to get recorded. It goes data to them.
Right.
Not going to happen.
Yeah.
It has to be a neutral player.
Yeah, I mean, I guess interoperability is everything here, right? I mean,
And the data, competitive data.
Yeah. So, yeah.
Yeah.
No, one sort of when you sort of onboard a new client, right, and because you're operating across industries and verticals, is there like sort of an industry logic that is already built into the ML AI engine, or is it sort of just based on what it learns with over time about that business, bespoke, specific to what it's seeing every day? The reason we say that, like, I mean, ML AI, as far as we're concerned, right, it sort of looks at data points, and more the data points, the finer the interpretation and hence the product. So when you're sort of getting into a new, let's say in your case you gave two FMCG examples, like can if let's say one of the clients has been with you guys or has been using your product for 2 years versus one on day one, can there be some knowledge that can be transferred here to sort of do a better predictive work?
Absolutely. See, there are terminologies, industry practices, even the logistic partners, credit periods, all vary within.
Yeah.
For instance, drug industry has drug expiry. Every single unit, if you return, has to be batch-wise processed. Tires have long expiry date.
Yeah.
FMCG may be shorter over it. When I earlier spoke about, we're the core engine. When you talk about building a lexicon specific to the industry. So once we work with one tire industry, so for example, like the two ways it works, both ways in network effect. We pick up industry lexicon, and it's not too different when you go to a continental or India or wherever. So that the ML engine, the AI has already built that lexicon to say 80% level, and we go to 2 or 3 of those things. It's nearly there. So an earlier example of Procter & Gamble selling to Reliance, once you have solved Reliance's the payment advice data, the engine learns it. Whether Unilever sells it, Amul sells it, Manico sells it, Britannia sells to Reliance advice, we solve that problem.
Yeah.
So there is huge. The initial one takes time training, and the larger data set is faster, and the network effect kicks in immediately.
Yeah.
So this 14 chains, or DMart and Reliance Retail and Amazon and whoever we talk, but once one client, they're dealing with each one of them, we progressively onboard them, and once they are onboarded, the next FMCG coming to this place, like the knowledge is in the system.
right.
We still say 95 to 98 because as in the industry there's always a change. They will code it one day, this day, and suddenly we don't understand this code because they have changed the coding from where. So there's always a little delta that happens, but that's minor compared to the efficiency that happens.
Yeah.
You know, I mean, it's very fascinating in terms of the overall approach and strategy here, like going bottom up and then kind of, taking up the entire value chain. What I'm a bit interested in is, I mean, I kind of personally come from a, I would say, credit/lending background, and obviously you did allude to the fact that essentially there's a big treasure trove of data which also helps underwriting from the standpoint of invoice discounting with third-party lenders. Is lending something that you are, like, as a captive lender, is that something that's also on the cards for global PayEx?
I'll come to this in a minute. But this problem not unique to India. Now we shifted our headquarters to US compared to the middle of last year. We're fairly, India is also reluctant to pay for software because its cousin out of IIT or which engineering college can do it today. That's the general, the B2B payments very reluctantly pay. But we now shifted with some big announcements coming soon. Some large accounts in the US. But the problem is exactly the same. It's not an India unique problem.
Yeah.
But the earlier problems we were discovering the same. And in some places, US where I live for 25 years now, but it's so bad. 40% of their payments are still checks.
Yeah.
Checks, drop boxes, B2B segment, I'm not talking about it, right? So, and then you look at they don't have an equivalent of an RTGS yet.
Yeah.
Wires or NEFT. Forget UPI. and there is no real time. So what as a digital payment ecosystem evolution is different parts of the world in different levels. So Europe with SEPA, open banking, probably leads it. India, it's its own micro, or I would say micro, but in our environment, we are quite sophisticated on the digital payment settlement ecosystem because of RTGS and NEFT and UPI. UPI unfortunately doesn't work well in the B2B segment that we cover because of limits. There's only 2 lakh limit. I said the limits could be larger. And it's also other things, banking, right? On the IMPS, there are pool settlements. So there are some innate issues with whether it would become a part of the stuff. But the problem I'm trying to say is that's how we have worldwide. We have many of you look at the part, a lot of them are global clients, and many of them say try successful in India, now they are taking us outside in the global stuff. The lending part, same issue. Where is the underwriting data coming from? The 2 types of underwriting banks, because you have a current account with them, the brand manager knows you. That's the specific ecosystem, and SBI, like the way some of the small banks also have a large number of banks. Ghana has probably 700 branches. So they have already an account with you, and most people don't lend unless you open an account with them. And there's some information of the credit period. Other is the scoring, civil scoring, whatever. But that data when you move from a collateralized lending to a cash flow based lending, where is the cash flow information if you have multiple bank accounts? You would find in MSME, a lot of them will keep money till last moment in a particular bank's savings account and move it to the current account a day before. They're not your big CASA example. Okay, CASA, yes. They don't have money in the current example. There is everybody, to me, pardon me, I may be wrong, but all the people who say we have AI-based lending, AI is used very liberally, and I'm a skeptic there. You're probably using, you lend and figure out the guy doesn't pay. Okay, make it an acquisition cost and say top him off. So, and it is not that. First of all, the data is not there. Where do you get the data? Companies won't part with the data. Unless, like for us, we are in the middle of the ecosystem. The companies are not going to, these are lying in individual ERPs. Because of, everybody maintains, most guys used to maintain 2 books, right? The second book of cash deals is never shown to income tax and so on. But that is getting better. So if you get better data, that helps underwriting, better lenders. So all lenders, people who work with us, are quite happy. So we have not started lending from our books even because of as an FLDG. We may go there sometime. So once we get there, see, imagine this 20,000 MSME distributor. We know every invoice at individual level payment behavior, and most importantly, let me give you what I call pricing information, which is not visible to the market at all. Let's say one of our companies gives you a 2% discount, somehow 3% discount for paying within a week, becomes 1.5% for paying within 3 weeks, 0.5% for paying by 45 days, and the discounts stop.
Are some of these companies conscious about ring fencing their data and for whatever?
Like some of them even would start off saying, when dealing with us, they say, how can we give you invoice data? Then we have to say, look, you're giving the invoice data to e-invoice. But at the same time, they are worried about the ecosystem, especially abroad. So we would let, in some cases, the data be exchanged with the bank. And we are a data provider for the bank. So the contract access, tri-party bank, us and them. So where banks become an integral partner for us is we need this payment information partner. And banks, every cash management RFP now requires, what's your integrated receivables management. And we are not competing. We are literally complementing each other. So in India now, we have, apart from JPM, you'll see announcements from there of large banks signing up as a product. This is a lending. Here is that's what I go back to that. If you really bring these pieces together, lending could go really efficient. The other part of what we do, which is important, on the collection, not just collect, If he doesn't pay,
Yeah.
suppose he doesn't pay the lender, but pays the company, starts after a while, build up a book exposure to a lender, I stop paying the lender. Instead, I go and pay the company, and the company supports orders to you. The lender is left holding the baby with no recourse.
Yeah.
Right?
Yeah.
So in some cases, hard recourse of the company where they would reverse the credit of the company. In other cases, we automatically can switch orders, stop orders on the system. He cannot place the order because he owes the money to the lender beyond the period. These are all, mutually interlocking ecosystems to drive lending from comfort for the lender, for the payer, and for the company, for the anchor.
So,
Does that explain what you're looking at as display, right?
yeah, no, this is fascinating, and the reason sort of we were talking about lending is because it's been really hot space, right, for the last 2-3 years in India, and lending's happened in like there are working capital financing. There's
You
AP.
can fund it very well if you're into lending.
Yeah, it's
Our MCLR to lending rates are astronomical.
yeah, and essentially, like, people have approached that from different ways and targeted different demographics, from students, etc. What sort of is interesting is you guys are obviously thinking about it. Do you think about it as a standalone vertical just because of leveraging the data points that you accumulate, or do you think of it as a bundled proposition with your overall tech play, that sort of it becomes like a one-stop invoicing / account, working capital efficiency management, and then what, there's a kicker at the top that we can even help you with financing. So is that sort of, do you look at it in a bundled way?
We have started mostly the model that you described, wherein and say, like, it's an integrated base, it's an integrated payment, including credit linked to this. One place you can pick it up.
Yeah.
If you look at our demos, you'll see 5 bank accounts he wants to pay from, the UPI hand, or let's say a credit card or whatever. The credit card business is still very nascent state there. Like the small business cards are barely making growth here. And the other is the 2 bank lending lines that's available there. So we bring lenders to them, or even if the company already has lender, almost all our clients force the banks to go through our system to the lender. Because how did trade finance work earlier? They would sign a 100% contract saying, okay, this dealers are financed. The company would send the invoice directly to the bank, the file-based system, and the lender would pay the bank and then run after the guys to do this, right? So even that exists still. I would say 90% of existing trade finance is that model today. We're changing that into become integrated flows with us. When we go and get to a client, if they already have lenders with them, they are forced to come in and we take additional lenders. See, look at the other way around. At a 3,500 crore company, most of our companies are the 2,000 crore book. No single lender will want to carry their debt. Who take more than 100 crore exposure in any of these companies, right? So, and then this, the 4,000 distributors one of our company has, there are different grades. There's an 80-20 rule. So people will be able to lend, willing to lend the top end, but it's a tail end which can be priced differently for credit. And that's only if you know what the data we're talking about.
Yeah.
Right? So it is a rich ecosystem if you have the data.
Yeah.
And you have to build on it. Yes, right.
Mohan, this has been a very fascinating conversation, and to kind of sum it up, I wanted to just ask you, like, obviously, we also through our work, when we talk to a lot of SMEs, family promoted companies, working cap financing is a major pain point that we often see. I mean, there are so many stories of guys who would say that we have orders in pipeline, we have purchase orders, we can't get financing against it. They're asking for clear receivables, or guys who are always looking for like some sort of unsecured money. They're asset light, and there are so many companies who would go for an equity round, and if you ask them what the use of funds are going to be, that's going to be for working capital, which is just so counterintuitive that people are looking at equity from the standpoint of bridging their working cap funding. What do you like at a very macro level? Is that a very India-centric problem that you see that when it comes to unsecured credit, it is a door which is open to very select companies, or where essentially when it comes to underwriting on cash flows, it is a major challenge for most lenders, maybe due to the deficiency of data, maybe due to
See, India was a collateralized lending space for ever.
Yeah.
Right? It was about 10 years that we moved towards cash flow based lending. Part of the problem of moving into cash flow based lending was there's no reliable data. Where would you find an MSME's cash flow data? He didn't deposit often the money in the bank. I come from part of my family is trading. So what cash comes in, they will make rubber band bundles, put a tag for who I want for tomorrow.
Right.
And there the collecting guy came and gave it up. None of that was ever available anywhere in the book.
Right.
So now forcing this 20 lakh limit for GST, even where they bought them was again kacha notes and stuff, right?
Right.
So this is again as we move more and more to the digital system, compliance with grows up. We are moving, and where negative interest rates is what's in many markets today. So we are still enjoying 6-7%. That's like people will bring in money and dump money if they can get 6-7% banking return.
Yeah.
Adjusted for FX losses. So this is a unique market, but the problem is same.
Right.
You will get a lot more authoritative data in US for it. MSMEs are credit rating. Whatever they submit you are verifiable. Right? And the bank, because they're all linked to the tax identification number, you can go to one place and that tells you which bank accounts we have. Even with the PAN, etc., now we are getting to somewhere, say, where a bank where many places people will, today we wouldn't know. If a lender going there, very rarely, I don't know how evolved it is, I haven't looked at people civil, etc., they're reporting this stuff. If they don't have a borrowing, very difficult for a lender to know whether this guy has a different account where he's depositing the money.
Right. Right. Yeah.
So it has to improve. Government backing, like the recent initiative of MSME or underwriting to a certain amount helps. Banks are very wary. So banks, if you look at this, a lot of my banking friends are all CEOs, their clients, business goes back. I will have this conversation with them. They say if somebody has 8-10% of an FLD, we are covered by their first loss. We don't care. Even there, one of the largest banks which I spoke to yesterday, from the largest private bank, said our collective exposure to this algorithm, the FLDG lenders is 200 crores.
Right. Right.
Okay, so where does when you look at the book size of these people, see, there's a lot of noise, there's a lot of funding, right? You look at the people who are lending to MSME. How many have more than a 500 crore book size?
Yeah.
Because are you going to fund from equity? Because they're not allowed to raise deposits.
Yeah.
So a banking license, now payment banks model fell through because they were not allowed to lend.
Yeah.
And till you are allowed to get capital at our interest rate, equity is a great way of getting subsidized capital. But can you raise billions of equity dollars to lend from equity? This is like you're already getting into RBI regulatory. What's your SLR, TRR, that kind of stuff. And would you take your equity or would you co-lend? These things are interesting financing questions. Default is a big worry. If you have been long enough in this space, you know what happened to microfinance.
No, super fascinating because, we keep on discussing internally how so many fintech lenders, they are kind of exponentially expanding their books, but funded by equity. And that over time, the real test of lending is if you kind of, actually raise wholesale funding and there's a cost that comes. Only then the lending model gets checked. So, it's...
securitization is at infancy.
Yeah. Yeah.
What is your asset quality? And who are you going to buy? Who's buying to buy that? A lot of those traditional large market stuffs are still getting in here. But every time I try to make sense, this is what holds us back. Should I get to do lending? And my good banking friend said, do anything but lend your own money. So you could be wiped out. Your equity could be wiped out. When COVID, one sweep of default, you need to be very careful in the market. But right now, have money, have formula, will lend.
Yeah.
The collection comes later. I say good luck to them.
Yeah.
They can, but the collective impact of that is still very small.
Yeah.
Just look at, what their book size is. They're talking about turnover. I said, we ran 3,000 crores. But the churn.
Yeah.
This is like
Slow.
going through that. Yeah. And how many are even paths to profitability now? When it sinks you when you get a big default. That's what to worry about.
No.
I wish good luck to them. I'm not being. I'm saying if we still have scars. We have to be conservative in terms of business models. We don't have to worry about valuation or how much money you raise. Really want to run a profitable business. So given those criteria, not that is it that good, we would like to get in, but I'm not so far reassured. We will, because when full data, this ecosystem play where the collections are in a way soft or hard secured by the anchor, and there's sufficient information. So we progressively adding lenders to the ecosystem.
Yeah.
Right.
Including some small finance banks and said bigger banks. Banks, this also you should know, you are in the lending business. Banks were ready to fund, historically, the AP part of it.
Mm-hmm.
Yeah.
Because the risk was with the anchor.
Yeah.
Right? So if you look at the AP funding given today, how many are, the book is, their loan is carried in the name of the MSME supplier. You'll be surprised now. Pepsi is doing some, brought in some, regulatory structure for those MSMEs get paid by the anchor, but that's a good measure, right? Mm-hmm. Otherwise, there is again, banks were, okay, am I taking a bet with Unilever or am I taking a bet with his auto supplier?
Yeah. Yeah.
No, see, you guys are right. Absolutely, you're watching this every day.
Mm-hmm.
So, but we're also looking at it in terms of whether there's a potential, when do we enter, what's the right model to enter, how to play it safe. But sometimes our friends say, what's your problem? Go raise up your billions and and it's out enough to raise. So, with a different model we pursue. But we will get in here. I'm saying we're getting somebody senior from the line business just to focus on it. Mm-hmm. And progressively the income from, we make a sliver on the spread between the MCLR and the lending rate. And that's our revenue model at the moment. Mm-hmm. Okay, so that once we get to a level, we might start working closer into lending. I'm not saying no.
Okay.
But this is a little more, what we call risk-adjusted, data-assured lending rather than, so I want to lend.
Yeah.
Mohan, this was a very, very fascinating chat. Thank you so much, and we always appreciate a conservative, level-headed perspective on lending because we have spoken with enough fintech founders who obviously kind of talk about the same paradigm from a very grandiose perspective. So this is a breath of fresh air. Thank you so much for your time. And I hope you had fun. We definitely did.
Oh yeah, good. Thanks, you guys. It's good to know that you understand this field. Speak to a lot of people. You know what's going on, and some of you have the banking background.
Yeah.
And lending is this management and lending is not something you just do. You start a fintech tomorrow and start doing. That's my view.
Yeah.
Okay. And we will wait and see how many survive from that model. How many go. One bad impact. See, the biggest banks, in the recent past, just asset quality review, 10% NPAs, you're sunk.
Yeah.
Just look at who does asset quality on this.
Yeah.
All right, but you will find out. We'll all be. I hope I am around till this matures and so forth.
Hopefully we'll exchange some notes when that happens. And thank you so much for your time. And this was fun. And so this is Nikhil Arora.
This is Sharad Tupran
signing off.